I just on 2012, and just talking to journalists and analysts this morning, if you think about the GNP for 2012, I mean, I saw that Goldman took down its forecast from about 4.1 to 4, I think, and Deutsche Bank 4 to 3.8. This is for worldwide GDP next year. If you think about the three things that are happening next year, the three events, it's a maxi quadrennial, as we call it. So the London Olympics, and despite the riots in London, which obviously are not good for brand Britain or brand UK, but you know, everything that we see in relation to the London Olympics is positive. We've got a large number of client activities with some incremental spending. It's not just diversion of money from preordained budgets. You've got the Euro Championships, football championships, which are the smallest of the three events, I guess, but is helpful. And then you've got political spending, which has already kicked off, which probably is about $4 billion, as best as we can anticipate. And the Supreme Court decision recently on lobbying and funding of lobbying, you know, pushes it further. So the $4 billion plays against $500 billion for worldwide spending on, say, traditional media or related areas, and there's another $500 billion, making $1 trillion for the industry and the other stuff that we do in research and public relations, etc. It seems that you would certainly get that if advertising follows GMP next year, and you have those three events, just theoretically for a minute, from a macro basis, it doesn't look an appalling prospect. And we are seeing analysts sort of forecast for next year. And this is not a prediction about next year. I'm not talking about this. You know, we've sat down and done our budgets and through it. But as we sort of get into our 3-year planning cycle, we've got our strategy meeting coming up at the end of September in New York, and we start to think about revising our 3-year plans and looking at next year. You know, when you start to look at those numbers, quite why the market has panicked to the degree it has is to my mind, a little bit of a mystery. And I was talking to the head of a major bank in New York last night, and it may be that because the markets were up 300 points, he was feeling a little bit more positive, but he did say that you think, you know, if you pushed him against the wall sort of thing, he did think the markets perhaps were being, that it was more likely that things would get better than that they would get worse from a market point of view.